everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. My guest is joining me right now. Mr. Tilewa Adebajo is the Chief Executive Officer at the CFG Advisory. Mr. Adebajo, good morning and welcome to the program.
Thank you. Good morning, Nancy.
Good morning. Let's get started. I would start by asking you, assuming you're a medical doctor this morning, an economic medical doctor, and perhaps you're also one, what is your pulse gauge for the economy right now?
I think the key word now is stability. We've achieved a high degree of stability within the economy and in terms of what we need to do. So it's now a question of having achieved that stability, how do you begin to grow the economy in a sustainable manner? So that's really the question right now. And I think as you rightly pointed out in your introduction, poverty alleviation and the social intervention program remains a priority. Since the minister was suspended from that ministry, we haven't heard much as to what the government is doing in terms of its social intervention program and how they can cushion the impact of these on the lives of Nigerians. And I think that is indeed another priority.
I assume that when you're talking about stability, you're talking about the macros. GDP growth of about 3%, FX rates, within around 1,600. Inflation is still stubbornly high at about 24%. Let's strip away the technical terms, because how Nigerians understand what the economy is, how they feel it. So would you say that Nigerians are really stable? Their incomes taking them home? Are they feeling better? Are they getting food to eat? Because I understand, I assume to understand that your stability is talking about macroeconomy, the macros.
Well, yes, I think the biggest challenge we're facing now in Nigeria is that of inflation. As you said, inflation has been stubbornly high. And when you have very high levels of inflation, what tends to happen is that you erode the purchasing power of people. And that is where people are feeling the pinch, because we can no longer stretch the naira the way we used to stretch the naira. We have become a sachet economy because purchasing power has been eroded as a result of inflation. Food prices have gone up. Food inflation has been a major challenge. Energy inflation has been a big challenge. As you said, both in rural and urban areas, the insecurity is, impacting adversely on food prices, because most of this insecurity is, of course, within the food basket of Nigeria. So it is important that we put in steps also, apart from stabilizing the economy, to reduce inflation, because a reduced level of inflation is what will make the largest impact on the population in terms of restoring their purchasing power.
Mr. Adebajo, I'm beginning to struggle with that word stability, and let me tell you why. Because the threats are all over now. Like I mentioned earlier, I just came back from Washington, D.C., World Bank, IMF spring meetings, and we were told a lot of things. We even asked questions what those officials think about Nigeria, and they were like, okay, that Nigeria is still vulnerable because of the threat of oil price. So why I'm saying I'm struggling with stability is that our fiscal policy right now is even being threatened with oil prices down. We're already operating at a deficit. So to you, what will a well-balanced economic dashboard look like? 3% GDP economic growth, inflation and all of that. What will it look like? And why do you think I'm still struggling with this stability thing? Even though I understand what you economists mean.
Well, the reason why you're struggling with it is the fact that we haven't really seen the impact on the lives of people just yet. And that I explained earlier is
So,
because
so
of
is it right for us
inflation.
to call it stability then?
Yes, it is right to call it stability
With
because
inflation at 24%, exchange
let
rate at
me
1.6,
let me answer your question.
unemployment rate high, poverty at 75%. Sorry, I'm interrupting you, but I'm
Yeah, but
just,
you need to let me answer this question first, and
yes,
then
go
I
ahead.
will go to those details because if you ask me too many questions, I'll lose my trend of thoughts. When we talk about stability, I think the reason why we're all having challenges with stability is that what is the impact of that stability on the lives of people? And as I've said earlier, the reason why people are not feeling that is because inflation is still at maybe 30%. Now, I don't even know what the real inflation figures are, but it's anywhere between 24 to 32%. So the question you asked me is that what will be the ideal dashboard? Now, let us go back to 2013 or 2014 in Nigeria, when the economy was growing between 8 and 10% per annum, which is ideal. So the Nigerian economy, because of the size of our population, must be growing at a minimum of between 8 to 10% per annum. So 3% growth is not optimal for the size of our population. That's number one. Number two, inflation should be around 11%. So if you go back to 2013, 2014, at the time where the Nigerian economy was growing about 8 to 10%, inflation was down to about 11% and interest rates were about 13%. So that would be the ideal situation for us in Nigeria. That's what you're looking at. That is really what would be when we will say that things are up and we need to be able to sustain those growths. So in terms of answering that question, why is there? So when you also take a look at relative stability, is that the Nigerian recession, the Nigerian economy is still growing. So it's not in a recession. So that is one thing that we need to be thankful for. But the Nigerian economy is still in stagflation, which is really what the challenge is here. As you said, we're still dealing with high inflation rates, high interest rates, high unemployment, and low growth. So, and it's a question of what policies do you put in place to be able to break that cycle and move into a sustainable growth area. So, and I think, as I said earlier, that is really where the challenge is. Inflation is the biggest issue.
How about the word recovery and not stability? I'm still probing that. How about the word recovery and
Let
not
me
and not
let me let
stability?
me give you some statistics.
Yeah.
I think maybe this might be able to help you put things into focus, especially when you talk about the exchange rate. 2 years ago, the net reserves were at about $3 billion. By the end of last year, you've seen a five-fold increase in the net reserves to about $24 billion. Now, this is a major recovery to be able to help with the stability of the system. As you know, that I've asked the question that shouldn't the naira be trading at below 1,000 naira? I believe you've seen the article that I wrote, and I gave extensive justification as to, why has the naira not moved. So in terms of that stability you're talking about, there are many reasons why I came in. I talked about the issues relating with the reserves, the size of the foreign exchange market, which is close to about $8 billion turnover on a monthly basis right now. We talked about the recovery of the net reserves to 24 billion. We've talked about the reserves moving up to about 40 billion, now averaging about 38 billion. And the fact of the matter that the Central Bank of Nigeria is only spending about is only accounting for 2% of the market. And more importantly, the central bank just released their annual reports. And you've seen that the central bank has taken a bold step to be able to settle out all its obligations, even at a loss, to be able to restore confidence into the markets. Now, if those trades or those forwards and those futures and those swaps had not been settled, it will create more uncertainty in the markets. So I think what has happened is that the central bank has stepped in and has sent a strong signal to the market that it has met its obligations and will continue to meet its obligation. Alibet that these obligations were inherited. And when you have an institution, you really need to just continue to be able to uphold those structures. So stability is one thing, but growth is another thing. You made the analogy of stabilizing a patient before you might even be able to, do some sort of surgery on the patient. But for me, what is important for me, like I've told you, is inflation. If you can take inflation down to 2014 levels, where inflation was between 9 to 11%, and we're seeing growth of close to 10%, then I think we can look at sustainability. Uh, Oil prices for me in Nigeria are not an issue. I think by now we should have understood that oil prices fall and oil prices rise. Most countries that are oil producing have set up their sovereign wealth funds and they're immune to oil price movements. Nigeria has not had that luxury. Even though we've set up a sovereign wealth fund, our excess crude account is less than $500,000. And the stabilization fund within the NSI does not really have much to support fiscal deficits. So what is important is that there was a time in Nigeria where we had excess crude in excess of $23 billion. But the subnationals decided they were going to share that money. They didn't invest it, and we're paying the price for that today. So what is important for Nigeria is that we also need to begin to put in a structure in place whereby oil prices are not an issue. And for me, I think even talking about oil prices, what is even more important is production. In 1977, Nigeria was producing 2.5 million barrels of oil. Today, we were down to about 1.4 million barrels of oil. 1977 is a long time ago. So that means that by now, Nigeria should have stabilized at least 3 million barrels a day. So even though the oil prices are trading at $50 or whatever it might fall to, as long as you can sustain a 2 million barrels a day production, that is the key issue. And I think one of the biggest threats to the fiscal issues are the forward contracts that they have done, those forward sales of crude. It is important that we really take a big look at that, and we need to refinance those swaps. First of all, those swaps need to be audited, they need to be reconciled, and I think they need to be refinanced into a proper structure so that we know the exact amount of those obligations. Because even if we increase our production to 2 million barrels a day, we're still going to have significant challenges with those forward swaps. So for me, that and inflation are the biggest threats to our economic recovery.
Okay, let me stick with inflation a bit. You said quite a lot, and I will begin to dig into those things gradually. You've talked about inflation. Inflation, we must understand that inflation is not just the statistics. It is a tax on the poor. What will really bring down inflation on the country? What structural reforms do we need right now to bring down inflation? The March numbers did show that it was elevated to about 24% from about 23% in February, even though that the MBS rebased inflation numbers. You've given us a very good analogy. We lived in a single-digit environment, inflation environment, in the 2013-2014. That was during Sanusi, Lamido Sanusi's central bank. So what are the structural reforms that we need to bring down inflation? That's one. Then number two, you did talk about, you said oil price is not an issue, and it shouldn't be an issue because we should be used to that. But economically speaking, we are not used to that. We're still open to the vagaries of the shifts that we're seeing in that market, which is right now threatening the revenues of the federal government in also a way to also hamper what the FG and the local governments, what the state and local governments also take home every month. So why do you say it's still not an issue when we've not been able to stabilize ourselves? Let me use that word that you use, to find a way out of this oil price shocks. And you talked about the excess crude account. And let me shock you that to my mind, I don't even think that I've not heard anything about ECA in the last 2 years, or even the last time I heard about ECA was during President Buhari, when the former Minister of Finance, Madam Zainab, did talk about excess crude account numbers that are at around 400,000, or was it 300 and something thousand dollars. Now, our excess crude account is $473,753. That is what it is right now, according even to the Accountant General of the Federation.
Yeah, I said so. It's less than $500,000. I think that's what I.
Yeah,
Um,
why is there no issue for you
well,
when there are issues all around?
Well, what is happening is that you see, excess crude account is not something that has been, excess crude account is not something that has been prioritized. And the reason why the excess crude account has not been prioritized is that most of this money now is supposed to go into the sovereign wealth fund. There's a stabilization fund within the sovereign wealth fund that is supposed to receive this money. And I think that account, I think, has not been funded because, as you know, we've been financing a deficit and most of the crude oil sales have been sold forward. So that's why I've told you that it's important that we reconcile this forward sale contracts. We audit it, we reconcile it, we know the amount, and then we refinance it into a more sustainable debt sort of profile. Maybe you set up a bond that NNPC will issue, or that will ease the financing with transparency and accountability, so that we know exactly what that position is. But again, my own key point with this is that I told you, I said Nigeria was producing 2.5 million barrels of oil a day in 1977. Okay, so that was 1977. Today, we're doing about 1.4 million barrels a day. That really is where the problem is, because we have not been investing in the oil and gas industry. At a point in time, our investment in the oil and gas industry was close to $22 billion a year. Now it's down to $3 billion as of last year. But then we're seeing some light at the end of the tunnel with the new management in the NNPC, with the sale of all these onshore assets. There's been a revival in the oil industry. The rig counts have doubled from about 18 to about 35, 36 just within the last year. And the NUPRC is expecting rig counts to hit 50 by year end. So that means that there's significantly more investments coming in. And I think the new MD of the NNPC has emphasized that he's looking at re-entry in terms of drilling. And re-entry means that you take mature wells, you go back in them to be able to optimize production from those existing wells at a lower cost. So the direction of the new NNPC management is very critical. So even if the oil price is $50, if you're producing 1.3 million barrels a day, there's still a shortfall. But if you're producing 2.5 million barrels a day, at the time we're not even able to meet our OPEC quotas. You see, so that's where the challenge is. So even if you just get your production to optimal levels, so if you have 2.5 million barrels a day and oil price is $60, that's fine. And if you have 2.5 million barrels a day, it drops to 50, you're still getting your revenues. But if you're at $1.3 million barrels a day, then it affects you more. So we need to get the production of the oil industry back to optimal levels. I think that is the priority. Then we need to start putting structures in place that are more permanent, that will help us manage the shocks within the oil prices in terms of ups and downs. Norway, Saudi Arabia, and a lot of all these other countries do not worry about oil prices because their sovereign wealth fund, for instance, the Norwegian sovereign wealth fund is worth $1.2 trillion.
Yeah.
And last year, it returned about $300 billion in profits for their governments. So they're not worried about where the oil price is anymore. That's no longer an issue. And that's the direction Nigeria should go through. We need to enhance the sovereign wealth fund, build up the stabilization fund in there on the long run so that it can help us manage the shocks. So there are many strategies to be able to support a lot of all these things.
Are these strategies short term? Because these problems are really short term and we really need to balance the budget as it is.
The strategy is long term, but the short term management of the budget, if you do not have these long term strategies established, then it will impact you on the short term.
So what contingency plans do you think that the government should have in place? Like I mentioned that during my intro, that I did ask Minister Wale Edu this question in Washington, D.C., and I seemingly did not even get the response I had thought I would get. I'm not a minister, definitely, and even some of my colleagues that we went were like, what's the minister saying? Contingency plan, scenario planning. I did see that kind of thing during Okonjo-Iweala's time as finance minister, where, of course, you will see different, this, all prices, this is what, if it comes down to 60, this is our scenario. If it comes down to 55, this is our scenario. Now, we're not having that kind of scenario planning. Do you think
Well,
that
I
this
don't.
government is thinking along those lines, and what kind of contingency plans should they
Well,
put in
I don't know
place?
about that. You guys were in Washington, so I don't know what the response of the minister was. But what I do know is that the issue about budgeting is very critical. From the investor relations document that I read, I think it was quite clear what their fiscal planning profile was going to be and what they said they were going to do. Like I've told you earlier, it's no longer about oil. We can't be predicting oil prices. Oil prices are there. What the government needs to do is to take a look at its own budget and maybe begin to reduce its capital expenditure, focus on its recurrent expenditure and reduce its capital expenditure, and let the private sector do more in terms of capital expenditure for infrastructure, in terms of concessioning, and looking at all sorts of asset sales to be able to get things done. As you know, I'm a big advocate of asset sales to be able to restructure the balance sheet of the government, because I think there are challenges there and there's need to optimize more equity within the balance sheet structure of the government. So those are ongoing decisions. So what you're talking about are budget-based pricing or budget assumptions on oil prices that have been made for the budgets. I think the Minister of Budget and Planning, I think, articulated that. And I think we're in a KPMG seminar earlier in the year on the budget presentation, where the Minister of Budget and Planning outlined all these scenarios you were talking about. I happened to be on the panel there, so I was there live, and I was part of the minister's presentation. I responded to it, and I think at that point in time, the Minister of Budget and Planning adequately responded to those scenario plannings you were talking about. So you can go look at that. So I think that's not the issue that we're talking about here. We're talking about the challenge of federal government with their fiscal deficit, with the debt profile of the government. We recently got a Fitch rating, which was positive in terms of upgrade. It doesn't help our investment grade, but at least it was a positive development. But like I said, while the debt profile now is manageable, it's not sustainable on the long run. On the long run, I think we all agree about that, and I think that efforts have been made to reduce the debt profile, the debt to revenue ratio significantly. But that is still not the issue. We need to look at longer term solutions, as you have said. The strategy on the long run needs to have been resolved, and then we can now balance out a lot of all these other issues, accordingly. So that's the way we should be looking at it.
Now, in your earlier session, you did say that perhaps the federal government should go lean on capital projects, and perhaps private sector should be able to take some of these projects. This is a country also where we see that businesses are gasping for breath. In your earlier statement, you mentioned, which I've actually also said on this program many times, that we are in a sachet economy. Nigeria's economy is now sachetized. So if you're seeing that private sector and even small and medium micro and nano businesses are gasping for breath with rising costs and inflation, which we did talk about, what kind of targeted support do you think that this private sector would give? What kind of oxygen will they provide for the economy at this time if the government is a bit deficient?
Well, I think what is important now is industrial policy. Industrial policy is very, very important. And now that we have achieved the level of stability, the question now is that, especially with Trump and all his tariffs, we need to review our duty. If you take a look at our duty on certain things like wheat, sugar, it's maybe about 50% or 60%. And we've actually put very high duties on some cars, importing of some foreign cars into Nigeria. So if you take a look at our tariff structure, it's quite high. Some things we've banned completely. So we need to review our tariff structure. We need to review our industrial policy. Our ease of doing business environment is very, very difficult, as you can see with what has happened with the Dangote refinery. Somebody has invested 18 billion and is having significant challenges. So those things need to be resolved. ease of doing business is very, very critical. And if you do not make things easier, then how do you want to bring in investors? And we're having challenges with FDIs and even local direct investments, not just foreign direct investment, but also local direct investments. So the business environment is a challenge, as you rightly said. Industrial policy review, tariff structure review, trade policy review. Those are things that Trump is now highlighting that we've taken for granted in terms of how it impacts our industrial development. For instance, we're importing 24 billion worth of goods from China. Our two largest trading partners are China and India. That's where most of our imports come from. So at the end of the day, the question is that we know China has a very strong manufacturing competitive structure. So if China does have a strong manufacturing competitive structure, the question you now ask yourself is that if China is exporting goods to Nigeria, they're dumping because our own industry they're going to find it very difficult to compete with the Chinese. So what you need to do in terms of industrial policy is that you need to get the Chinese manufacturers to at least set up industry in Nigeria and ensure that for whatever it is that we're importing that is in large quantities, the Chinese are partnering with Nigerian investors and they're making the investments and doing the production in Nigeria. That is part of your trade policy. That is part of your industrial policy. Then, like I've said, the issue with power. We understand how power is creating a great constraint to the industrial development of this country. Industrial clusters are here, and even places like the Dangote refinery are self-sufficient in power generation. Dangote on its own has its own power plant, and I think is independent of the grid, even with its own cement production. So a lot of industrial companies that are successful are self-sufficient in power generation. So that's what we really need to take a look at in terms of that infrastructure. But for me, I think we're long overdue for a review of our industrial policy, a review of our trade policy, and a lot of our duties, because that's, I think, is causing a lot of problems.
What would you say to a teacher in Oshobo now, or a market woman in Nyanya, listening to you saying all of this, who is hearing about what you've been saying in the last couple of minutes, stabilization and what have you? Because Nigerians often feel like economic policies are designed without empathy. And we've seen it actually, even in your earlier statements, you mentioned that Nigerians are really not feeling the policies that the government is putting together. So how can policymakers really better humanize economic decisions? Because at the end of the day, we think that perhaps government officials are not truly grasping what it costs to live a decent life in Nigeria. And that's what the World Bank report on this rural poverty brought out, that if we're having more people in the rural areas, it's a very threatening indicator, which I mentioned at the beginning. If people in the villages are poorer, that means that's disaster looming.
Well, like I've said, there's, people always talk about, I think it was General Obasanjo that talked about you need to have any adjustment program, economic adjustment program with a human face. And I think that is very important, as you've said. Without a doubt, like I've said, social intervention is very important to cushion the impact of these economic issues. We've now been on this for 2 years, and I think after a while, people are going to start asking, what is going on? We have not seen any improvement. While a lot of us might agree with the policies that were implemented in terms of removal of fuel subsidy, a lot of us also do not agree with the way it was implemented, because we felt that the implementation should have been a lot better. I believe, as I've said, that the Naira should be trading below 1,000, which will help significantly. Inflation, like I've said, is still a challenge. And of course, we've said the way and manner the subsidy was removed, I think could have been done differently. But having said that, all those things have been done. Another challenge we have now is that all the savings on the subsidy now are using towards debt service. I think we've talked about debt service and debt management being manageable versus sustainable in the long run. So I think at the end of the day, I think what is important also is that, you need to talk to the government officials. You are close to them there in Abuja. We are in Lagos. And we advise our own clients, which even might include a market woman, how to put in your survival strategies. How do you hedge against inflation? How do you manage in difficult times like this? For a lot of people, it's not easy. People are losing jobs. People cannot afford what they need to do. And it's important that, we begin to put proper structures in place to address this. And having said that, I think it's also important, when you talk to your government officials in Abuja, that they improve their ability to communicate. Because if you want people to buy into your programs, then you have to get buy-in. You have to actively engage, and you have to lead by example. And people have to show that we're all committed and we're all in this together and we can get it through. So if people do not feel as if they're part of this whole thing, or there's empathy, as you've said, then it becomes more difficult. And I think that people also want to see that there is commitment to resolving these problems. And I think if people see that there's commitment to resolving these problems, there is proper communication and effective communication, not only to the populace, but also to the financial markets. If you're not telegraphing your information properly, then there will be a significant disconnect. So really, that is really where the challenge lies. But of course, we have a social problem here in Nigeria, and that really desperately needs to be addressed, without a doubt.
What is
We
the role
can't.
of, yeah, what's the role of subnationals in all of this? I did indict them even at the beginning of this program when I was talking about the World Bank report, because the rural poor are in villages, in states. We were told that if the twin reforms were being are allowed to go through, that states will get more money. And I must tell you, of course, we've all been seeing the data. Federal government, states, and local government have been sharing trillions and trillions and trillions of naira. They've said, okay, things will be done in the state, we'll have more money for infrastructure and all of that. Yet, poverty seems to rise, income inequality is rising. You talk to even some state governors now, what they will tell me is that inflation has also eaten into the money. That is their excuse right now for the trillions of naira that they are getting for their state. So how indicting is this report for state governors? And let's leave President Tinubu alone for a second.
Which reports is this you're referring
No, I'm
to now?
talking about the World Bank report on the rural poverty.
Well, I mean, this has, like I said, I've not seen the report, so I can't really
The
comment.
role of state governors now. And the World Bank has
I
said,
will comment.
yes,
I will comment on the subnationals, as you said, but I
yes.
have not seen the particular report you're talking about, so I can't comment on it directly. But I'll comment on the subnationals. Well, first of all, I think we cannot all begin to use inflation as an excuse. I think what has happened under this regime is that because of the removal of the fuel subsidy, the governors are getting a lot more allocation than they used to. But again, they might be complaining that, prices have also gone up, but it should not be by the same amount. But I think what is important now is that we all need to redefine the role of the subnational, because there's intervention at the federal level, there's intervention at the state level. One of the biggest challenges you always find in the states is with infrastructure. People in the state will say, where's the federal road? Where's the state road? There's always that challenge. So I think there's certain things that needs to be, responsibility of the states, the responsibility of the federal government, and I think there needs to be more harmonization between the subnationals and the federal government on policy implementation. I think it is important that each state government should sit down with the federal representatives and understand what the federal budget is. How much of the federal budget is coming to our state? What should the state governors focus on, and what should the federal government focus on? Because I don't see that harmonization. I don't see that synchronization. And if you have divergent policies between the subnationals and the federal government, then you find out that a lot of money is going to be wasted. Because if the state government is making an intervention in agriculture, for instance, then how much support does it get from the Federal Ministry of Agriculture in terms of support and funding or policy implementation or policy facilitation? So I think for me, that is really where we have the challenge. But the subnationals do have to play a role because they also have a budget. They can also contribute to their economies at state level. And at the end of the day, the federal government of Nigeria doesn't have any land. Any investment, any opportunity that is coming, or any company that wants to come to Nigeria, any company that wants to set up a business, has to go to one of the states in Nigeria to get land and to set it up. So it is also important that when it comes to the ease of doing business, I think it is these subnationals that pose the biggest challenge because there's multiple taxation. They are the host communities. So I think what is important for subnationals is that they must realize that they must have business-friendly policies towards companies setting up businesses and managing businesses, not to begin to tax companies with multiple taxes and make it difficult for companies to operate within their states. And I think this is really where the subnationals need to come in, because the federal government of Nigeria does not have any land. If the government of Nigeria wants to increase agricultural production, it doesn't have any land. It can only talk about a policy. It is the state governors that have to make land available for farming and for industry and for commerce. So I think for me, that is really where we need to have that reorientation between the subnationals and the federal government on policy implementation and making, not just awarding contracts. Because we have a mentality of, we have a budget, we want to spend it, let's just award contracts. It's contracts, spend, spend, spend. But the spend needs to be able to go towards some sort of specific development.
Thank you very much, Mr. Adebajo, for your insights this morning. Have a great week. All right, I've been speaking with Mr. Tilewa Adebajo. He is the Chief Executive Officer at the CFG Advisory, and we've been looking at the Nigerian economy, navigating the global uncertainty as well as the pressures that we face here at home. That's the much we can take on today's edition of the program. Thank you all for your company. As always, please join me again tomorrow, same time on this station. I am Nancy Naji. Be the best you can be and be the change that you want to see. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.